Good morning, everyone. This is Travis Nixon, Tyler Tucci. Morning of June 28th. We've got a good show for you today. We're going to be talking about emerging markets, how we look at these markets going forward, where are the strengths, where are the weaknesses. We do have a really solid pick from this. So tune in for the back half of the show. We're going to be talking in depth about that. But first, we've had 3 companies release their earnings after yesterday, our weekly earnings roundup. And we want to discuss some of the results so far from our earnings models and how we're doing to date. So Nike and Jeffries came out yesterday after market, and then TCOM released before market this morning.
No, that was yesterday as well. That was the third one.
Oh, was that yesterday? Okay.
Yeah.
All right, great. But we are seeing a lot of market movement this morning, right?
Yes. Oh, significantly in TCOM.
Yep. So let's jump into Nike. And just to remind everyone, I'm going to pull up on the screen what our call on Nike was.
So, okay, yeah. So our earnings, the good, the bad, and the ugly. Nike, this is one we called, kind of screws with some risks to lower. Not much lower, but, it was something we said we didn't want to take a long earnings trade in, but also at the same time, we weren't going to throw Nike out of a buy and hold portfolio just based on this earnings. And I think we got that a bit, pretty much right. Nike's down about 3% here pre-market. That kind of concludes our earnings-based view on it. We'll potentially look to try to pick a bottom later, or to call a turn and get out in front of you guys. But at the moment, we're just going to leave that there. But it's nice to know that in this case that we were able to kind of sniff out some weakness.
All right. Yeah, I want to talk a little bit about Nike and our long-term view on that, because I think some interesting things are happening in the company. Good to touch base on it just while we have it in front of us on the screen. But let's move forward to the rest of our earnings. Jeffries.
So this one kind of hurts. We had a pretty big non-consensus forecast. We had EPS coming in almost double. What really happened is it just kind of came in, just a little bit under. I believe 45 cents a share. The street expected 60. Revenue's pretty much in line. And I think, Travis, you were talking to me before about, things that our model is learning as it pertains to bank earnings. Do you want to kind of share that?
Yeah. So like I was saying yesterday, this is Jeffries is releasing Q2 revenue. They're a little bit unique because their Q2 ends in May. So it sets us up to be able to see what the rest of this sector is going to look like going into Q2 earnings. So quite educational. For me, as a data scientist, what I see is that this earnings came in at the 16th percentile. And so I'm always looking at this as percentiles, right? So there was an 84% chance that it would end up higher than it was according to our models. That means we need to do a little bit of model retweaking. This being the first of the season, it's really educating us as to how we're going to be looking at financial services going into the rest of Q2. So this is going to be a model improvement moment. And I think it's showing exactly what the bleed out from this first half of the stock market performance is like for financial services companies. We saw their investment banking portfolios still do pretty well. It was really their asset management. So for all other companies with a significant asset management portion of their business, the model is going to be doing some real serious rethinking going into Q2. So yes, this is a miss, but also a great opportunity to catch it better on the next time. I know that I sunk a significant portion of my portfolio into this call, down 4%. Luckily, given the rest of Foliko predictions yesterday, I actually came out ahead of the market, about 0.5% yesterday. So not as bad as it could have been given the rest of the portfolio. But this one stung. This one stung, Tyler.
And yes, and for record keeping, this isn't the most scientific way that I'm just going to take some pre-market level for the show, but we have to. We have to do it, intellectually, honestly, somehow. So I see here on TradeView pre-market $27, down. That's down about 3% from where we bought it. So we're going to take the loss there on that. As I mentioned, when we do these earnings trades, and this is something we are trying to tweak in terms of what the optimal holding period is. But we ultimately believe that our edge is over the specific earnings event. So, in theory, you'd want to buy as close to that earnings event as possible, i.e., 5 seconds before the close before they report. But that's something, we're working on to try to optimize the path as well. But for record keeping, we will do our best to just look at the event itself, even at the risk of using an imaginary price, pre-market. We'll see where it opens, and if it's significantly lower than that, I will change the mark to keep it intellectually honest. But in terms of benchmarking, I think this is good enough.
It's interesting, Tyler. If you look at the Jefferies stock price over the past week, there was some market appreciation in the past few days.
They took it to 30. They took it to 30 yesterday.
Yeah.
Which I thought was going to be meant some good news for us. But
I think a lot of people were expecting it to be better than it ended up being. So we're certainly not alone in the camp, but that doesn't matter. We got to be ahead of the camp. So Next time we will be better. All right, let's move forward to TCOM.
So this one we're gonna raise our hands on because we had a great forecast and we didn't do anything for you. So TCOM's up about, I think, 14% here pre-market. The market was looking for I believe it was negative 20 cents of EPS, and we actually had a positive EPS here, and it only came in at minus 6 cents. So that's a pretty decent beat, and that's almost profitable like we were looking for. We just didn't do a darn thing about it, which is a shame because, that stock's up significantly pre-market on, a closer path to profitability.
And this really comes back to, there's the data science piece where you have your models making a call, making a prediction. But at the end of the day, that interpretation layer, that human element of people looking at data and making decisions after it, that's really what we're bringing to you with Foliko Live. And this was one where, I wish I had thrown this and thrown my weight behind this model prediction as well. This was strong.
Because we talked about this too, right? How we actually saw a very high likelihood that it would be profitable because of, you mentioned there's a high % chance. So we bungled this one. We apologize sincerely for that. If you had our data, you would have seen it and out traded us, at least I hope.
Yep, absolutely. All right. So with that, I do want to do a quick note to Nike. I've been looking at them a lot since their earnings release. I love what's going on there in terms of going direct to consumer. So Nike's actually one pick out of this earnings call that I'm going to be adding into my long-term portfolio. Just not significant holdings, but just something to see their evolution as they transform to go direct to consumer. This is one company that I don't think has benefited tremendously from the online revolution. One of the strongest branding companies in the world. I mean, people they'll make YouTube videos that's an ad, and 50 million people will watch just that ad on YouTube. That's a brand with some extreme power and connection to their consumers. But they've always gone through that intermediary distribution network, and now they're really transforming in a big way to go direct to consumers. I think that's an exciting movement. Hopefully they don't sacrifice some of their brand value and they can figure this out. So this comes down to the leadership capabilities of Nike, but I think that that's a strong leadership team currently. So I'm throwing in a good way for Nike mid and long term. All right, Tyler, thoughts on Nike before we jump to emerging markets?
I mean, as something of a sneakerhead, I can never be too bearish Nike. I mean, they have given us some of the best gym shoes of the last 1, 2, and maybe 3 decades. So that's a name that goes in there with the research and own things the level's starting to improve. So in a long-term portfolio, something like that does make sense. Personally, I'd probably prefer to wait a little more, just given Foliko's general market bearishness. But yeah, I mean, that's something that has a home in most portfolios over the long term.
Yep, absolutely. All right. So emerging markets, Tyler, what's the thought here?
So let's check out my spreadsheet. So here are some names from a smattering of EM ETFs. So we have names that are in the EEM ETF, which is the big basket, although it's mostly Chinese names. We have Taiwan Semiconductors, which is basically explanatory for the majority of the EWY ETF, which is the South Korean ETF. We have ITAL, Vale, and Petrobras, which is both components, some component of the EEM, and they're also large components of the EWZ ETF, which is Brazil. And then we have two other high flyers here, MELI and Globant. And, I hate doing this, especially given how far these things are off highs. Tyler, the human trader, looked at the 4 and 12 weeks forecast, was like, God, just more all out bearishness. I mean, Melly down another 25%, Baba down another 25%. And we actually, believe it or not, we have actually some good reason to believe that Baba's going to, have this weakness, and Travis is going to show you in a second. But really it's long Brazil, short China. Our favorite name in here is Petrobras. We think it could be, as much as 33% higher over the next 12 months. I think that's pretty exciting. The other interesting thing is it's the only one that we see near-term strength in too. And this is something I touch on frequently, or as frequently as I can. When I'm looking in Foliko, I like to see a path that's in agreement. So I want to see, all green forecasts or all red forecasts. I don't want to put myself in a situation where, necessarily I'm trying to be too fine and, be long for a day and short for a month. You can use that information to say the market's going to go up today, so we can use that strength to enter shorts. But, I don't like to basically day trade off of this. I don't think that's the right way to think about, something that's mathematically based. If you're mathematically based, you want as many cracks as possible because you think, over as you increase the sample size, you will be right more times. So we want to see a larger sample size, I think, than just kind of trying to point and shoot at one.
Yeah. Well, Tyler, so I've been doing some deeper dives into emerging markets, and I got to be honest, looking at a lot of these ETFs, there's a bit of confusion on my part. And you were saying some interesting things about how to trade emerging markets that I think I'd love for our viewers to know about, because I'm looking at, here's the iShares just emerging markets ETF, right? And I'm seeing great strength up till 2007, 2008, and then mostly just flat since 2007, right? If you got in 2007, most of the time you'd be saying, and for most markets, that you've made some fantastic returns over the same period. EEM just not thriving. We go to country by country, and remember, about a decade ago, everything was about BRICS: Brazil, Russia, India, China, Korea, right? These were the 5 countries that were emerging. And just most of the growth was expected to happen in these 5 companies, and it was attracting incredible amounts of investment. And so Brazil being one of those, again, 2007, it's actually been angling downward ever since 2010. We come over here to South Korea. Now, South Korea doing pretty good, and there's some fantastic brands coming out of South Korea: Samsung, Hyundai. I love South Korean companies myself, but at the same time, it has been a rough show since really the beginning of 2021. They started their slide down in this market earlier than the U.S. did. Come into Taiwan, TSMC really being a huge strength there. And then we have 3 ETFs just based on China. So there's the CNYA, the MCHI, and then the FXI. Now, the CNYA is interesting because this is an ETF that is made up of only companies that foreigners typically don't have access to. So you would ordinarily need to be an insider within China in order to hold a lot of these companies. But they've made an ETF so that you can still gain some upside there from those companies. Great, pretty solid returns going into 2021, but they've really had their troubles this year as well. So, Tyler, this looks like a bad deal to me. But from what you were saying yesterday, I'm not looking at it with all the details here. How do you think about emerging markets as a trader?
So emerging markets are, as a somebody with a U.S. front end interest rate background, I kind of believe that EM's like the the last part of the puzzle. So you have what the Fed's doing as it pertains to the dollar up traditionally has been bad for EM. U.S. rates up has been bad for EM, especially because emerging market companies generally have to borrow into dollars. So they're losing on both sides of that trade. Their borrow is getting more expensive, and the thing they're going to pay the loan back with is getting cheaper. So that's kind of a double whammy. EM has been a haven for yield, especially on the FX side. So when you look at spot FX returns, you're not understanding the full picture, because if a currency carries at 4% a quarter, and we're only down 2.5% a quarter, actually the performance is net up when you're because of the the way the forward market is shaped.
So all that to say is, going into emerging markets, is this a hedge against a dollar fluctuating or getting weaker?
I mean, it's certainly a dollar view. To get long emerging market stocks, you would have to be of the opinion that the dollar is at least done going much higher. It doesn't have to plunge lower per se, but stability is definitely something that's helpful and needed there, generally speaking. So it's interesting because we do have some pretty bullish forecasts in Brazil. And I was looking at the EWZ ETF, and that's kind of coming into some interesting levels. So if you wanted to, instead of just buying PBR, which is the view here, we see PBR itself up 30%. With some decent longer term performance in Vale. If you kind of just wanted to take a more stepped back approach, you'd buy the EWZ ETF potentially, where PBR and Vale are big holdings. But the thing I will warn you is, so is ITAL, which is a Brazilian bank, and we got a pretty nasty forecast there. So this is a call. It's not necessarily a call I would trade or completely agree with. It would be interesting though, because this says strength in Brazilian commodities versus some weakness in Brazilian banking, which would be kind of an interesting juxtaposition. But there are multiple ways to do it. I'm a big believer in if you can trade specifically your view, you should do so. So if you can trade single name stocks, if you can take a view in PBR, I certainly would do it that way though.
Now, so I'm looking at EWZ and what their breakdown and makeup is here. Vale making up almost a fifth of what that is. And now Petrobras, I'm having a hard time getting a full understanding just from this view of how much of it is PBR, just given that it's broken up here into the different kinds of shares. So it looks like there's 4 different kinds of holdings of PBR in
so that's 2 plus the one in the middle is a bank, is another bank that we just don't have data for. Otherwise, we certainly would have showed it. So yeah, you should sum those.
But I mean, it looks like EWZ is really coming down to a select few tickers. AMB, InBev coming out there.
Yes, and it's very important to know, obviously, but some people don't. Look at the holdings of the ETF. Make sure you're long what you think, long or short what you think you're long or short. It's very important. I've coming into this personally, I've had heard some stories where you think the view you have is not the view you have on, and that stinks sometimes, especially when you're right and the trades you put on ends up going against you, even though you had a perfectly correct thesis. So that's something we're going to focus on is to make sure to talk about the positives and benefits of different ways to gain exposure to these trades, because I think it's very, very important. So
rather than going into the ETF, for me, I'm seeing more strength in just being a picker here.
Yes.
And picking out PBR. I'm not big on Vale. I actually made a good return on Vale about a month ago on just a short holding there.
We have Vale bottoming on June 17th. So if you like dates, we think the downside is exhausted. Later in July, and you can buy it, later this summer for a trade into, or into the year, into year end.
And we haven't looked at the health score comps yet on Vale, but just getting this view here out. Interesting that the 10-week you said the bottom out was when now?
Like July 17th or so, according to Foliko data.
Interesting. Okay.
Show them Baba, because this is, you showing me this gave me the confidence to come on here and tell the people that we see Baba down another 25%. So I think this is very interesting.
This is a new look at the data here, and let me see if I can zoom in for everyone so you can see this clearer. And let's go picture in picture over here so that we can zoom in even more. There we go. All right. So we have 8 different predictions for every company in our holding list, right? And this is just a reminder of where our predictions are coming from. We take a whole bunch of open source information, which could include anything that you could see with a search on the internet, right? So anything anyone is saying in a formal or informal fashion, be that social media, news, or everything like that. And our models crunch this all together. And then they make a baseline for how is this company performing compared to how this open source information baseline occurs. All of these predictions are in Foliko. So actually, I'm gonna get that caption up and running right now. Subscribe to Foliko today. You're able to see the whole coverage list, not just the select few we pull out for Foliko Live. And so all these models, I mean, we missed TCOM yesterday. You wouldn't have missed it if you were subscribed to Foliko. Go synerai.com, synerai.com. Subscribe today and come out, see the numbers, see how it plays, form your own theories, hypotheses, and get in. Baba. So now what I've done here is I need these models to be able to speak the same language. When you're looking at the 16-week model or the 12-week model, oftentimes you're going to see really large numbers, because if the model is forming a view 16 weeks later, that view is going to translate into something really big. And comparing that with the 1 day, well, the 1 day is going to be obviously much smaller numbers. So directionality or conviction wise, it's hard to compare them apples to apples. So what I've done here is I've normalized it. And so now I would be able to come in and say this 1 day number here translates pretty directly to the 16-week number here. And so Baba going all the way across, we're seeing a pretty consistent red line across all the models. The 1 week is actually positive. So, and look at the 1 day, look how negative that 1 day is. So there is volatility in the near term that could produce a little bit of upside, but Baba has not finished its downward turn. We're seeing a similar story with JD, both being JD is China, right?
Yes.
So both being
big Chinese retailer.
Yep. Means that we haven't seen the bottom out there. TSM is interesting, such an important name in semis.
I don't have to remind you how we feel about semis in general. So
right. And that continues that story. iTub is really a mixed bag. So, on that view, if you wanted to go into, what was it? EWZ, iTub being a big part of that. Yeah, maybe there is some strength. Vale, also a little bit of a mixed bag. Vale's been bouncing everywhere. If you can get in at the right time with Vale and be in for a 1 week trade, again, I've made some good green on that for my portfolio, but that's if you get the timing right. And again, subscribe to Foliko, get the timing right for yourself.
And that's also there's a ton of micro factors involved in Vale as well. They had an accident, I believe it was 1 or 2 years ago, that, basically they're still trying to figure out who's culpable. So there's a whole bunch of, interplay between them and the Brazilian government and, what you can and cannot do. So there's another piece to that I actually think is important to have Foliko, because it allows you to kind of, Foliko picks these things up.
Yep. PBR. Let's take a look at Foliko and what it's saying about PBR. Let's see, where do I have PBR pulled up? Okay. Let me get back here. So yeah, as you can see, I was taking a look at PBR. What's fascinating about them is they have not enjoyed the outsized returns from the energy sector yet. I think that there's some latent value yet to be realized in this company right here. Look at these predictions and how much inline and how much consensus there is in our predictions for this company. When I see, and just so you know, my personal trading strategy for the past week, I've been adapting a little bit. And I've been going more from, because I was really bullish on the 1 week and the 1 day numbers coming out. And so when there was a really positive 1 day or 1 week number, I would trade on that. And my returns were good, but I was really hoping for something a little bit more. So now I've been going full line consensus, where I can get down to the weightings, look at the 16 week and the 1 day together. And when all 8 of I call them model counselors, basically it's my personal portfolio board of review. When all 8 of them are saying you need to go in on this, I've been going in. Yesterday, the market was a little bit down. I was up except for Jeffries. I was up about 6% on my other holdings. So this has been a really positive way for me to go. Look at their earnings power health score. A lot of fantastic things coming out for them. Systemic dragging them down a little bit on the health factors, but also look at this long-term view. I love this 10-week view. Look at this. Their earnings power leading the pack, and then management reputation and competition really healing along the path. And we can come in and see exactly what's going on here. This Yahoo Finance article, I love seeing this kind of article coming from this company, where the CEO is telling he has no government guidance on pricing policy. And that's a little bit of the worry, is how much is the government going to be involved in these emerging market names? We know that energy is strong. So why hasn't PBR picked up a lot of the strength from that sector? Well, it probably has to do with some external factors coming in and pressuring, not least of which being how the government is treating this company. But given the strength here, given that we're seeing just positive things across the board, I know I myself am going to be going pretty hard into PBR.
And we like to see, if you go back to Foliko, I think this is kind of interesting. So what does it mean when all of these are crossing zero back to positive? Does that, I could explain it at 50%. I want, you to give people the you're the one who built this. So what does it mean to you when this, these 3, so that's, sorry, I don't see so good. Management, competition. So they've all crossed zero from the bottom. So what does that mean to you?
Yep. There's actually a few different things going on. So there's 3 things in particular that I look for. I look at the current state. So is this number right here, all the way at the right, positive or negative, right? We're seeing some green lights on the positivity, especially on earnings power. I look at the 1 week slope. And that 1 week slope is very informative, especially for things like our earnings calls, right? That 1 week slope will tell you whether or not there's a good shock happening in the market or some momentum behind them on a particular factor. Their 1 week slope is phenomenal here on the earnings power. It's a mixed bag on the management, but for competition and reputation, we're seeing a positive 1 week slope. The third aspect that I look at is that 10-week slope. So a lot of times you'll see issues bubbling up on that 10-week factor basis where maybe a little bit of a scandal is found out. It doesn't seem like a big deal, so it's not affecting the stock price, but that scandal keeps with them. It's sticking onto them instead of going away. And that can be a tick just sucking blood from the company and energy out of that stock price. So all 3 of these factors come into me and are very informative for me to start getting a gut feel for what I want to be doing with this company. These health factors we do a lot of reviews, and next week actually we're doing a special health factor educational session. 4th of July week is going to be our Foliko Ed week. We're going to be talking about the market and stuff like that, but we want to really show how our numbers are made. So bring you along with us, build that trust. And these health factors coming in, you start to form this gut reaction of saying there's a consensus happening here, and that's something I want to be a part of with PBR. Does that answer the question, Tyler?
Yeah, no, I just, I think it's important for everyone to hear about, you who built all this. How do you think about it? I mean, I have ways to think about this, and we have, collaborated ways to think about this, but I think it's important for, you who built this to really explain, and make it clear how you intended this to, be thought about. I think it's helpful for people.
Well, and I think that's some of the magic of why I like our conversation so much is we just have entirely different worldviews coming in and talking about the same thing. I'm a data scientist. I look at the numbers. A lot of it is this case study format of what are the numbers telling me and how do I put a narrative on top of that. You're coming in with this really deep market understanding and knowledge. And when those two things meet, I think it just results in some really cool conversations. All right. So, but Tyler, we do need to sign out for today. We're at time. I think to bring it all home, emerging markets, I hear a lot of questions. Can emerging markets be a safe haven in today's volatile market, especially given recessions coming up? I think our numbers here are showing that's not necessarily the case, but there are pockets of strength. I agree with you. I like Brazil, especially as we're going through this today. I've been liking Brazil more and more. Even the companies that we're not bullish on, we're not particularly bearish on. And that's cool how the numbers are coming in on a pretty solid consensus together on that. Like all of our Brazilian stocks are the least negative out of all of that. Tyler, what do you think? Last thoughts?
No, I'm with you. It's funny. A mentor once told me that if you ever read a research piece that ends in a question, the answer is no. So, and kind of emerging markets bottom? No, not really. We think at least 12 more weeks of downside for pretty much everyone that we have a coverage on.
Yep. And again, these numbers can change anytime, right? So these Foliko numbers update on a daily basis. And so we'll update you as often as we can. If there's a sudden shock to the market or the dollar starts weakening, a lot of this starts changing. But in order to really be the most current possible, subscribe to Foliko today. Thank you for joining us. 25 minutes to market open. I got to go play some trades, and we'll see you tomorrow, 8:30 a.m. Bye all.